We're getting to an incredibly interesting by the dip moment, but hopefully you can understand that nothing happening here is out of the ordinary apart from the peak fear narrative. Sentiment is wildly overdone here. And don't forget, coming out of we're going to tariff everybody a gazillion % will be the walk back, the discussions, the negotiations, the agreements, and all of that will take uncertainty out of the market. So on a forward-looking basis, ignore all the work that we've just done. Is there likely to be less uncertainty or more uncertainty in a month's time? It is almost 100% likely to be less uncertainty. Markets hate uncertainty more than anything else. They overshoot when they're trying to price uncertainty, and then they'll price in the outcome.
Raoul Pal discusses the current market environment, emphasizing that while fear is at extreme levels, this often signals a buying opportunity. He notes that markets hate uncertainty, which is causing the current panic, but once clarity emerges, prices typically rebound. He predicts that in a month the uncertainty will decrease, leading to a more favorable environment for market. He highlights that investor sentiment is at its lowest, which historically indicates that a market turnaround is near. With financial conditions easing and indicators pointing to potential market improvement, Powell believes that now is a time for savvy investors to pay attention. The market's oversold conditions in major assets like Bitcoin and the S&P 500 suggest that a recovery could be coming soon. Powell stresses that the current situation is not like the 2008 financial crisis, as it's more of a fear-driven downturn. With improving financial conditions, he expects a strong recovery, particularly in Bitcoin and other risk assets, in the coming months. The current market phase is seen as a typical correction before a new rally begins.
So, Julian, what does this start to mean for markets? Because markets are getting utterly terrified and are creating inflation narratives, recession narratives, broken business cycle narratives. What is the markets telling us right now?
Sentiment and positioning.
Maybe I've seen this deck before. Maybe I know.
I think you have seen this deck before. Well, let me talk about that. So if we talk, first of all, let's just go back to the chart I posted on X. I'm not going to skip all the way back up, but you guys will have access to this deck. But essentially, if we look at the 3-month rate of change versus either the NASDAQ, the S&P 500, or Bitcoin prices against our financial conditions index, which is obviously advanced and inverted, we've priced in all of the Q4 tightening in financial conditions, and now financial conditions are easing. So the expectation here is that now that markets, if we look at this, are extremely oversold. So if we look at the S&P 500, the percentage of stocks trading with a 14-day RSI below 30 being oversold is at almost 50%. And by the way, the markets, well, I don't have my Bloomberg open, but at the time we were recording this, the market was rallying back, but this does not take into account today's move, whatever that is. Okay, this is yesterday, or this will be Friday's close. So we saw, a move up to 50%, which is the most since Q4 of 2022 when Raoul and I were writing that article, The Turn is Near. And before that, COVID, like when the economy, the entire world economy shut down. Then you look at the NASDAQ and you're like, oh, right, highest since COVID. Okay. A very different environment, obviously. And then if we just look at a series of other measures, if we look at the percentage of stocks trading above the 50-day moving average, oversold, 200-day moving average, oversold. This is the NASDAQ. If we look at the S&P 500, the percentages of members with new 50-week lows at nearly 30%, Q4 of 2022. Same thing with the NASDAQ. And then when we talk about investor sentiment, back in early March, the AAII survey showed a surge to 60% of investors surveying that they were bearish. And that's only happened 5 other times looking back to survey inception back in 1987 or so. And then if we just look at what happened last week on prices moving lower again, we saw a spike to 62%, which means that investors, according to this survey, are as bearish as they were in March of 2009, or that was the last time we saw a push above or to 62%. And by the way, so that was the global financial crisis. Excuse me. And March 2009 was the low for the market. And then if we look at the Conference Board survey, so 44.5% of consumers currently expect the stock prices to decline over the next 12 months. And that's the highest since July of 2022 and before that, October 2011. So the point here, and I'm going to show you a couple more of these, if if you don't think that we're heading for a 2008 style entrenched global recession, which is not our view, these are incredible data points to take a more contrarian
Don't
view.
forget, for 2008, what was different is that was a collateral crisis. That was before QE was used to stop collateral falling in value. So that was a full-on debt deflation that was stopped via the printing of money, the debasement of currency, which lowers the value of the denominator and optically makes assets rise. Once you do that, you stop the risk of a collateral crisis, which stops a debt crisis. You pay for it via debasement of currency, but it's a slower mechanism than losing 75% of the value of stocks.
And then when we look at Bitcoin, so I think this is a great chart. This is Bitcoin, and then it's 14-day RSI. And what I had been saying at MIT from really, I don't know, when did this trigger? What was that? Last month? 2 months ago? No, a month ago, when we fell below 30, is that it's not unusual, if you look back at the previous 3 times Bitcoin triggered an oversold reading, to base. And this base can take time. And you know, in both the 2022 instance and the 2023 instance and the 2024 instance, we made lower lows. And if we look at intraday pricing overnight, we made a slight lower low versus the lower low which occurred, the low which occurred last month. But again, I believe we're in the process of this basing. So the kind of this accumulation phase. And then if we look at the last 3 times, so that would be the teal line, so the average price trajectory following the last 3 Bitcoin RSI oversold readings. And again, oversold means below 30. This is the current trajectory versus the future trajectory. So what you can see is I'm looking back 2 months and then forward 4 months. If we just look at when things start to pick up, it's really a month and a half after the original oversold reading is triggered. So these bases take time. And so
the next phase is very strong.
That's right. And so what's been frustrating over this phase is the chop. And I can see all over Twitter, and we've talked about this before, people are like, oh, well, Bitcoin's down another 2%. No, or it's down another, whatever. It's not. It's just been doing this. And so, it's been going up, whatever, 10%, then down 10%. But we made a new low intraday last night, which we've already recovered. But the point is
normal for alts, and it's normal for alts to bleed in that environment, generally because there's more issuance of alts, and generally as people pull in from the risk curve, alts come lower, but they come back faster, which is that alt season chart we talked about before. I know nobody believes in it now. There's too many altcoins. It's only Bitcoin dominance forever. It will most likely, probabilistically speaking, play out like it's always played out, which is as the ISM rallies through 50, this recovers. What happens is alts outperform.
Raoul Pal views the current market turmoil as a chance to buy, citing that market drops driven by fear often precede strong rebounds. He predicts that the current period of uncertainty will soon pass, setting the stage for a market recovery. According to Pal, investor sentiment is at a low point, and with financial conditions improving, the environment is ripe for a turnaround. Pal points to the oversold conditions of major assets like Bitcoin as a key indicator of potential growth. He believes this market dip is simply a typical correction, and once the panic clears, a rally is likely to follow. With improved financial conditions and extreme market fear, Pal sees a strong recovery on the horizon in the next few months.
So the question you're all here for is the banana zone canceled? The answer is, in our view, no. First of all, just to piggyback on what Raoul said in the beginning within the don't this up checklist, we have seen over the last 2.5 years 7 20 to 30% pullbacks in Bitcoin. And while you're feeling this current one, because we're still in it at the moment, you probably don't remember any of the other ones that we saw because off the low point, Bitcoin, even with prices coming lower.
Apart from the other 30% one, which was that September one,
that final flush.
Yeah, people remember that, like they'll remember this, but the rest, I can't remember any of them.
Yeah, I don't either. I just remember it being what we were calling at the time the boring zone, just waiting, and it felt so long. But again, even with prices coming down, over the course of Q1, we're still up 400% off the low. So you don't remember these things once they come to pass.
And also what's interesting about that chart is, okay, so the correction is in line with expectations. Then again, you've got the big picture macro, the business cycle, the liquidity analysis, the sentiment analysis, and the technical analysis, all telling you that maybe everybody is over-fearing and that the upside projections are the probabilities are for upside as opposed to downside.
Well, and as I had pointed out within the business cycle section, Bitcoin's already priced in an ISM of around 47, okay? And if that's right, based on the move that we've just seen, but as we've been highlighting, financial conditions are now easing, which means that over the next 3 months, the data should start to improve. So it's fairly unlikely that we get to 47. And so anything that comes out next month, as I showed you that kind of new orders chart, should start to move higher over the next 1 to 2 months. That's not at all in the price right now, given what we're seeing. And then when we look at the 2017 cycle, so the cycle that Raoul and I feel based on our views around the dollar and liquidity turning higher, we saw 2 30% corrections, 1 35% correction, and 2 40% corrections over the course of that year, right?
And
However,
also with that is the cycle didn't get going because we had the same tightening of financial conditions in Q4 2016.
Yep.
The cycle didn't actually get going till the end of April, and then it accelerated. And again, it's very similar to us is where we are today.
Well, kind of the end of March, right?
Yeah.
So more where we are now, actually.
Yeah, true.
So it didn't really pick up until the end of March, which again looks a lot like today. But then if you just zoom out once again, over the course of that year, so Trump victory in November, in January, on the 4th of January, we saw that sharp, harsh, what was it? I was going to skip up. Was it
35%, I think?
Yeah, 35% drawdown. But then off that low point, over the course of that year, despite the 5 or so corrections I just mentioned, 2 of which were 40%, Bitcoin went on to 23x that year. And no, I say this all the time, we're not expecting 23x. What I'm just trying to set for you is the framework for understanding, where we are and why we still think the best is to come. And speaking of that, again, one of the charts that Raoul and I had originally published, which now is all over everywhere, we've pretty much closed the gap with global M2 using the more correct 12-week lead time.
I think the 10 weeks looks just as good. Either way, it's
one of the
basically
two.
a wall of upside to come.
Yeah, and so what this would suggest, if we're right here and everything that we just outlined, is that Bitcoin should be putting in new all-time highs, or at least hovering around all-time highs by the end of June. And the same is true for the Nasdaq, which has grossly undershot global M2. And what did you call this? Excess fear?
Yeah, it's like this is the market pricing excess fear. This is the VIX going to 60. We didn't have the same in crypto. This has been driven by equities because obviously you don't tariff cryptocurrencies, but you tariff equities, and the market is struggling to price this in. But again, once China's deal is agreed, and the ugliness of the negotiation, let's see how that goes. But once that is agreed, there is a big gap versus what liquidity is doing, and we will have a very fast snapback, I think.
Yeah, I totally agree. I think it'll be, once we get the DMARC count stacking up, I think it's going to be a pretty V-shaped move.
Yeah, and that comes next week. By Wednesday, if it continues to count as it does, and then next week should confirm a weekly 9 as well. So again, it is, opportunistically speaking, incredible chart.
Raoul Pal sees the current market downturn as a buying opportunity, believing that fear-driven bear markets are often followed by strong recoveries. He highlights improved financial conditions and oversold assets like Bitcoin as signs that a rebound is likely in the coming month. Despite current uncertainty, Pal is confident that the market will recover once the panic fades, suggesting investors should prepare for potential upside in key assets. Do you think fear in the market is a chance to buy, or should caution prevail? What factors do you consider when predicting a market recovery? Share your thoughts in the comments.